Good evening, traders, and welcome to your market wrap-up. Markets remain highly volatile as trade tensions, economic shifts, and geopolitical developments shape investor sentiment. From fresh tariff battles to key economic data, there's a lot to cover, so let's dive right in. The US dollar is under pressure after Commerce Secretary Gina suggested excluding government spending from GDP calculations, a move that could distort economic data and mislead markets. At the same time, Canada is preparing $155 billion in tariffs on US goods, escalating tensions that could impact the Canadian dollar. The euro remains supported by Europe's fiscal unity, but rising bond yields and the risk of US tariffs on European exports could change that quickly. Trade tensions and ongoing Ukraine negotiations will be key drivers. Meanwhile, the yen continues to act as a recession hedge, but recent Euro JPY movements were likely a short-term liquidity event rather than a fundamental shift. With non-farm payroll data due Friday, traders are waiting for a clear direction. OPEC agreed to increase production after pressure from Trump, causing Brent crude to drop 2.8%. Trump has long pushed for lower oil prices, and this decision highlights his influence on global energy markets. Meanwhile, Saudi Arabia pledged a massive $600 billion investment in the US, strengthening economic ties. Elsewhere, Russia is benefiting from better shipping conditions and allowing it to increase crude exports despite sanctions. At the same time, the US imposed new tariffs on energy imports, 10% on Canadian crude and 25% on Mexican oil. Given Canada's key role in supplying US refineries, these tariffs could disrupt supply chain and raise fuel costs, creating uncertainty in the markets. Gold rebounded over 1% on Monday, reversing a two-day decline as safe haven demand increased. The Atlanta Fed's GDP Now model downgraded Q1 2025 growth from 1.6% to minus 2.8%, increasing fears of a slowdown and boosting gold demand. Weakening US Treasury yields and ongoing geopolitical tensions and tariff threats are also supported the rally. However, gold's strength remains uncertain. Last week, it fell 2.65% as US stocks rebounded, breaking an eight-week winning streak. With ECB's interest rate decision and key US economic data ahead, traders will be watching closely to see if gold can sustain its gains. Well, that wraps up today's market outlook, with trade tensions heating up, economic data shifting, and central banks in focus. Volatility isn't going anywhere. Stay informed, trade wisely, and we'll see you in the next update.